On Wednesday, the 26th of November 2025, Rachel Reeves announced probably one of the most widely anticipated budgets that I can certainly remember. A lot of business owners, certainly that I've been speaking to over the last sort of 6 or 8 weeks, really waiting in anticipation with bated breath to see what changes were going to be announced by her. But rather than the potent doom and gloom that everybody was expecting, there was actually a lot less said than people were expecting. And I think a lot of that was down to the fact that there was so much sort of pre-warned to us all before the budget. There was a lot of talk and speculation about what had happened. So a lot of business owners had covered off, what these might have meant for them and how they were going to sort of tackle them. But the reality was that there was far less in it which actually directly affects businesses. But there are nevertheless some important points that are likely to sort of affect SME owners and directors of companies out there. So the aim of today is to really summarize and have a look over some of those key points to see how that might be affecting you and your business. So I think the first thing which really sticks out is that there's been another increase in the minimum wage. And I think the issue with this is more, it comes off the back of the NI increase, which happened in the last budget, which a lot of businesses out there, a lot of business owners that we're speaking to are still coming to terms with that. They're still trying to get their business running profitably again with the increase in the wages. Now, obviously, if you're a member of staff, it's a good thing. But for businesses which are entrenched with people that are earning minimum wage, so if we're looking at, for example, the hospitality sectors, we speak to lots of small cafes and restaurants businesses which tend to employ younger people that are on minimum wage, then this is really going to directly affect their wage bills and obviously their ability to trade profitably. If we look down here at some of these figures, so apprentices and those aged 16 to 17 will see a 55 pence hike to £8 per hour. 18 to 20-year-olds, their wages will jump 85 pence to £10.85 an hour. And those over 21 will receive £12.71, which is an increase of 50 pence an hour. Now, that might not seem a huge amount, but that is a considerable percentage increase. I think it's about 7% across the board. So straight away, welded on already rising costs, which we saw happen earlier on in the year. That's going to make it very, very difficult for some of these small businesses like hospitality that are entrenched with these sort of types of staff, the younger minimum wage people, to actually start to make ends meet. So I think there's a lot of concern. There will be a lot of concern, especially going into the new year after Christmas. Christmas period tends to look after itself. It's quite busy. But when we get into January, February, March time, I think we're going to start to see a lot of problems there. Another point is the business rate reform. Again, so this is kind of bittersweet, really, depending where you sit on this. But the Chancellor, again, she mentioned that she plans for permanently lower tax rates to be introduced for over 750,000 leisure, retail and hospitality properties during the 26-27 tax year, which is great. If you fit into that, if you're a small cafe type sort of restaurant setup, that's really good news. But to fund this, there's always a sort of an opposite effect to these rises. The money has to be raised from somewhere else. Reeves is looking to implement a higher multiplier on properties valued over 500,000. So if you're in a business which requires sort of larger warehousing, for example, or larger business space, you're going to be on the wrong end of this. And in particular, if you're one of these small businesses, but in a city where rents or business properties are a lot more expensive, so like in London, something of 500,000 is really going to be everything. So again, depending on who you are, where you are, this might be good news, it might not be good news. Another thing that Reeves announced was that training for apprenticeships will be fully funded for all small to medium-sized businesses, but the only stipulation on this being the age cap of 25 on the apprentice. Now, I think universally everybody is seeing this as a good thing. What we might start to see is an unheralded boom for small companies that tend to take on lots of apprentices. I think one of the things that we've spoken to lots of small businesses, lots of the niche businesses, a lot of the artisan type businesses, they're struggling to get younger people into their businesses. They're struggling to have that continuity of skill. So if we've got this incentive from the government to fund young people coming into the businesses, it's great for the younger people, it's great for the businesses, and it's fully funded. We don't know where that money is going to be coming from, but not wanting to get too negative on this point, I think this is probably going to be universally seen as a good thing. We also heard a point about there being greater freedom for pubs and late night venues. We don't really know what this meant. We just heard a mention of that. What we assume is that it's basically going to cut a lot of the red tape for pubs and venues if they want to stay open later, basically, and capitalise on sporting events. Or I think we've got a World Cup coming up. Yeah, well, we have got a World Cup coming up next year. I'm not sure with it being in America if there's games that run later on into the evening or whatever. Traditionally, pubs are going to struggle with that. It looks as if they're going to have more freedom of being able to just operate as and when they want. And it's a good thing, I think, for business in this sector. They've suffered enough over the years, the pub trade. So having that flexibility to open as and when they want without the red tape and the freedom, with the freedom as and when they want to do it, I think is going to just give them more opportunity to make some more cash. Another interesting point was something known as the de minimis rule, which people may know as the low value consignment regulation, or it's often abbreviated to the LVCR. And what this is, traditionally any item under the value of £135 was able to enter the country without any trades or tariffs or duties to be paid on it. So it would allow much easier for consumers to buy things direct from people overseas, basically. But what we've seen in recent years is the massive growth in companies like Temu and Shein that are pumping stuff into the marketplace without these tariffs. People are going on and buying £20-30 items, and they're just coming direct in from the countries, which is great for the consumer. But Reeves has obviously seen that this is damaging for businesses, and we speak to business owners and we hear it, especially like in the clothing sectors, they just cannot compete. So by getting rid of this point, it might just level the playing field out again and allow for some of these UK-based companies to be able to compete and make some money. The other important point to make about the minimis rule is that it's the impact on the wider economy. What it tends to do is it cuts out the supply chain. So what people perhaps don't recognise when they're buying their clothes or their item direct from overseas is that it's not touching the UK soil really in terms of the supply chain, or it's not generating a profit for business. So from a sort of macroeconomic point of view, having the trade on UK soil, encouraging that back home, is going to mean it's going to create jobs, and it's importantly going to create profits, which in turn the Exchequer will be able to tax, and we can all benefit as a country, not just the small business. I've spoken to a lot of small business owners, and there was a lot of concern that there would be greater changes to the corporation tax. Now, there was quite a few changes in the last budget to do with corporation tax, and also when businesses used to be known as entrepreneurs relief, now business asset disposal relief. There's always a lot of concern over this. But this time round, there has been no change to the corporation tax rate. That has stayed the same. But what some of the business owners that are listening to this might be interested in is the dividend tax rises and the frozen tax thresholds will affect many of the managers' pay and the business owners' pay and how they pay themselves. There's some other notable points that I've raised where I think it may affect small businesses and the types of business owners that I get to speak to on a daily basis. So soft drinks levy extended to high sugar drinks, including milk-based drinks, which at first I wondered what that meant, but there's a lot of protein shakes and those sorts of things which have become quite a trend at the moment, and I believe that they will be captured in this. Don't know an awful lot of detail about that at the moment, other than it's going to make them more expensive, which means it's going to affect the demand, it's going to affect the market on that. So if you're in that marketplace, if that's what you're doing, I think also it will be done things like milkshakes. You see these types of businesses that are selling these, they're quite popular. That's just going to make things more challenging for them. There's a new tourist tax on overnight stays as well, which again, there's a positive and negative thing here. Just reading some articles before on this about small business owners in little seaside towns, how there's two sides to it. One is the money that it raises is to go, in theory, directly back into those market towns and help promote the areas and allow for better facilities and such like. However, the actual tax itself will in effect increase the cost of the stay for the tourists. So it will do one or two things. It will dampen demand, or it will force the person that runs the hotel or whatever it may be to slash their prices, which is going to put more pressure on their already probably difficult margin. Electric vehicle drivers, they're going to face a 3p per mile tax from 28-29, or 1.5p per mile for hybrid cars. This charge will rise with inflation. assuming here that this is to counteract the loss of fuel duty as we see the movement away from traditional combustion engines into the EV market. I did some calculations on this. If doing between 10 and 15,000 miles a year, some people will do more or less than that, between £300 and £450. How's that going to affect the small business owner? Well, two ways. One is that because of the incentives that were put out there during COVID, I think back in 21 or 22, there was a huge surge in business owners buying electric vehicles because there was tax breaks. So obviously this rise is going to affect the business owner, but also if the business has, say, a fleet of vehicles. I was speaking to somebody earlier and they were pointing out quite rightly firms like Amazon and such like. I know these are much bigger companies, but there will be others out there. They have fleets that they've been sort of incentivized to move into the EV market for their fleet. Obviously presumably that's going to hit them. So that's going to be another dent in their profits. Fuel duty has been frozen until September 2026, followed by staged increases, and a temporary 5p cut is also retained until September 2026. Again, this is probably seen as good news, because if you are operating in that sort of world, you've got a fleet of vehicles, or you are in the transport industry, that's going to help things. I suppose the flip side of that is that it's going to be harder to maintain our highways, but focusing this time on the business itself, if that's something you're into, that can only be seen as a positive. Gambling taxes to rise on remote gambling, but no change on in-person gambling. If there's any bookmakers, out there, obviously that's going to affect them. It's either going to mean for the consumer that their odds aren't quite so good, or it's going to mean that the bookmaker is going to have a higher tax bill. Just extending on that sort of gambling world, bingo duty is to be abolished entirely. Not sure that's quite so important, but if you are a bingo hall, then that's good news. But I think it tends to be a bit of a dying industry now, especially with the online games that are available. Unless there are bingo games online that applies for, we don't quite know yet. But there's a potentially another saving there, which is positive news. Something a bit more interesting, if you are offering enterprise management incentives, also known as the EMI scheme, we just hear that that's to be made more generous. Well, what that scheme does is effectively offers tax incentives for staff members of companies if they are to buy shares in that company they work for. So this is really quite an interesting point. It's a good way for businesses to raise cash. It's a good way for staff members to get a tax break, but not only that, to become more invested in the company they work for. So I think this is a good idea. And I think if it's not something which your business has ever looked at or considered, then maybe looking into this. I think there are some stipulations on the size of business and how it works, so you can get some tax advice on that. But that's an interesting one. They're just telling us at the moment it's to be made more generous. But I do think that there's definite positive trade-offs for both sides here. And not necessarily aimed at businesses here, but I know a lot of business owners will be affected by this. But making tax digital for income tax, there'll be no late submission penalties for quarterly updates during the 26-27 tax year, because I know in January every accountant is untouchable. You can't get hold of them because it's this frantic time. It's very stressful. Nobody likes doing them, let's face it. So good news there that there's to be no late submission penalties for those updates. So I think in summary, as we've said, with this budget, there was so much speculation beforehand. I think, quite honestly, that sort of kite flying, as they call it politically, where they're really measuring the response from people before they implement something. Although it can be useful, the government seems to do an awful lot of that this year. I think that's probably because they didn't quite know how to play this. They've got a very difficult set of circumstances to overcome. But certainly that speculation, from conversations that we had with some of our clients, directors that we're speaking with every day, it was putting everything on hold. That speculation was quite frankly damaging. So although what we're saying in summary is there wasn't an awful lot brought in as many people feared, the doom and the gloom, some of the things we were hearing and fearing didn't actually happen, that 6-8 week speculation, that build-up, really put things on ice. So I think that in itself is probably one of the negative things about this budget. And also, it was not so much what was said, but it was more a case of what wasn't said. What we're facing at the moment is a situation where business confidence is very, very low. And what we've not really seen is we've not seen any incentives or anything to really create anything, any excitement, any feel-good factor, anything to boost that confidence. And I think for me, that is probably perhaps the biggest concern here. So not what was said, but what hasn't been said. And also on the flip side, for consumers, there's nothing in there for people on the street to really get too excited about. If anything, most people are going to be caught in a tax rise. Okay, it's not a direct one, but by freezing those tax rates, more people are being, the phrase is fiscal drag. They're being dragged into paying a higher tax rate. Okay, they were frozen until 2008 anyway. They've only been extended 3 years, but it's just this negative speculation that from consumers that they're going to be paying more taxes. And what that means is they're more careful with their money. There is no sort of confidence out there for consumers to go out there and spend on big ticket items, is what I'm hearing. And this is only going to sort of double down on that. So obviously consumers, these are the people that buy from the businesses. So I think although the doom and gloom wasn't in the detail of the budget itself, the lack of any sort of commitment to growth, anything that's going to really sort of boost anything out there, is really going to leave businesses that are already feeling pretty flat, as it were, certainly no better off. But we will obviously have to wait and see. But if anybody's got any anxieties about this budget, about how it's going to affect their cash flow moving forward, then of course, feel free to get in touch and we can have a chat about that.